Welcome to Chit Chat Money. On this show, hosts Ryan Henderson and Brett Schafer interview industry experts and riff on the world of investing. As a quick reminder, Chit Chat Money is a CCM Media Group podcast. Ryan and Brett are also general partners at Arch Capital, and Arch Capital may have positions in the securities discussed in this podcast. Anything discussed on Chit Chat Money by Ryan or Brett or any other podcast guests is not formal advice or recommendation. Now please enjoy this episode.
Welcome into Chit Chat Money. My name is Brett Schafer, and I am joined by my co-host, Ryan Henderson. Today is our Tuesday not so deep dive episode where we analyze one stock by covering its business model, ownership, financials, future growth opportunities, and really anything that interests us about our first look, or in this case, second look at a company. Today, we are covering Pinterest, and we're going to get into it. But first, Ryan has a quick update for the listeners. We are doing a survey, so we would appreciate any listener to help us out with that.
Yeah, I know we have historically been survey haters here on this show, but we want to get a better grasp on kind of who our audience is. And I think, we've met a lot of you, we've talked to a lot of you, but we don't, I guess, have that much data because Apple does a bad job sharing it and Spotify only has limited data. So we're going to run a series of surveys, I think, over the next couple episodes. If you're listening to this out of turn, it might be off. But today, I think for this one, it's going to be pretty simple question. Do you spend more than $100 on investing related services each year? And it's just going to be a simple yes or no question. That could be like 7 investing. That could be you pay for Bloomberg if you're a little more on the professional side. I'm guessing most of our listeners aren't paying for Bloomberg terminals, but really it could be anything, whether that's a recommendation service, whether that's a platform that you use, whether it's Substacks, anything. If you think you spend more than $100 a year, say yes. If you don't, say no. Just curious. All right. That's our survey.
Yeah. Okay. And also that could apply to your business as well. So if you work in a business that does that, because in reality, to any sort of advertiser, that is much more valuable if you work for a business that pays for investing services. If that counts as well, please say yes. Obviously, don't say yes if you don't do that, but it'll be a simple question. It'll pop up where Ryan and the Spotify player, right?
Yeah, I think it's only Spotify because So if you're on Apple, sorry, just the back end doesn't allow us to do that. But
yeah, it'll be through Spotify. So just click over to the Spotify page and it'll help us out. All right. Today, as I mentioned, we're covering Pinterest. If you want any of the charts or notes that go along with this episode, the day this releases on the Tuesday, I will be sending that out through our newsletter. The link is in the show notes. It is free. We'll have some fun ones. I have a good chart comparing ARPU of Pinterest versus Facebook. Spoiler alert. Doesn't look great, but that's a little teaser for kind of the big question we have this episode. Also, if you enjoy the show, the best way to help us out is to give us a review on Spotify or Apple. Ryan, why don't you just get into it? A lot of people know Pinterest, but I think a lot of guys who listen to our show maybe are not familiar with it, which, I don't know, help them out here.
Sure. I guess I'll give like kind of the basic boilerplate stuff, which is Pinterest is an image-based social platform, and it's predominantly used on mobile. So 80% of engagement is apparently on mobile. That's something that the CEO recently mentioned. And 76% of their users are female. So really a female dominant platform. I think most people have probably heard of it. Most people have probably used it, but it's unlike other social media platforms, the common use, like this is more of a high intent search. So as opposed to something on social media where you're kind of just browsing, let's take Instagram, for example, you're not really looking for anything specific. With Pinterest, it's almost more of a search platform where you're looking for some inspiration or kind of discovery. So a common use case would be something like, show me some vegan recipes or something like that, or beach wedding ideas. And
isn't wedding, they said weddings is their number one, right?
Is it?
I think so.
I could see that.
Yeah.
I don't remember them mentioning that, but it certainly could be. And then you'll get basically this scrolling feed of just pictures that are related to those keywords, and it's going to hopefully give you inspiration for ideas that you want to implement. I remember I used this, I think when I was like looking up ideas for decor for a living room, and you can get an image for an image, and then you can click on the image and it's going to have all these tags basically that'll redirect you to websites potentially to kind of show you what those products are, where they go. And you can also save these pins on like a board. You can create your own pins. You can add stuff. It's really kind of just, I don't want to say Google for pictures, but think of it kind of like that. Am I describing that well? Because I know most people know what this is. I just want to.
Yeah, I think it's search queries, but as well, you can follow people. There's probably popular Pinterest users that people follow where that would maybe overlap a bit more with Instagram. And then they have as all social media platforms do, or a lot of these social platforms do, they have your feed where they toss out a bunch of pictures, videos, and hopefully better sponsored content in the, whatever, just that you can swipe through.
Yeah, which leads into the part I wanted to focus on, which is the monetization. So as you can imagine, those search queries lend themselves pretty well to advertisements, and that, if you're looking for new electric vehicles and someone runs an electric vehicle ad and you're looking for pictures, it's a pretty ideal place to advertise an electric vehicle. Anyway, so Pinterest has a number of different ways that people can advertise, and I'm pretty sure all revenue comes from advertisement or maybe like kickback, like commissions. But there's really kind of three ways to do it based on the advertiser's objective. So the first one is just building awareness. These are ads that look like your typical pin, and you'll just see like the tiniest little thing that says promoted by at the bottom of the pin. And this is pretty simple. You're just trying to drive awareness to a product or service. That means you're paying on a cost per milli or a cost per view basis, depending on if it's an image or a video. And it's pretty much the lowest cost kind of advertisement that you can run on Pinterest. And you're pretty much just trying to redirect people or raise awareness for your brand or product. Maybe people go off the app and go search your name somewhere else, but that's the only goal. It's the cheapest advertising product, just typical brand advertising. Second one is consideration and conversion. So these are what Pinterest refers to as its mid-funnel performance marketing solutions. The goal with running these ads is more to generate clicks. And so you're paying on a per click basis. They also include mobile deep linking here. And so it'll either redirect people to a product listing or a website, or if you're on mobile, which 80% of engagement is, mobile deep linking is it redirects you to a specific part of an app as opposed to just opening up another app.
And that means like checkout page specifically, right, a lot of the times.
Right. And so that, like I said, you're paying on a cost per click basis for those. That's more the performance marketing. And people, I think, get attracted to the performance marketing. We're actually dealing with this a little bit on the podcast side of things, where you're paying more because you know that you've got to click. Whereas the brand marketing can perform well if it's a well-run ad, and it can actually generate a higher ROI because you're theoretically paying less if it spurs more demand. So it's really kind of up to the service how they want to advertise, but a lot of these have like it can work. It doesn't. Not everyone just goes for the performance marketing, I guess. Last one though I'll talk about is offline sales. So these are what Pinterest refers to as their lower funnel performance marketing, which is you're literally paying for an action. So it's called the cost per action basis. Basically, you're paying for someone to click on your website and make a purchase. And these are the highest cost ad format. And every single one of these advertisement types are paid for on an auction basis. So if I go on and I want to advertise, I don't know if you can really advertise a podcast on Pinterest, but let's say I wanted to sell some clothes and I was running a shop. I could pick any one of these. It'll say like, what's your objective with this ad? Do you want to raise awareness? Do you want to sell products? I'll say, okay, sell products. It'll give me what my max bid for a purchase or an action is. Like, they'll ask me what I want. Let's say it's $2. That's what I'll say. And then they'll have a floor, because you know, if you bid like 10 cents or something like that, you're not going to find any ad inventory. They'll build a floor, and then they'll know what your ceiling is, but they'll basically give you whatever the market price is for those advertisements throughout. So it doesn't always hit the ceiling, but it allows you to kind of get a better sense of what your marketing budget is going to be. I hope I'm explaining that well. There's a lot of different advertisement types. Pretty much everything here is redirecting you to other places to shop. That's kind of the goal with Pinterest.
It's e-commerce.
No native checkout.
It's e-commerce, man. It's e-commerce. That's it.
Yeah, but it's like
it's e-commerce ads, but it's e-commerce.
It's
but the advertisement it's almost all spent by e-commerce companies, which, as a little teaser, we'll talk about the biggest e-commerce company in the world, or in the United States, as one of our future growth opportunities. But yeah, sorry, continue.
Anyway, history, we've talked about this before, but it's somewhat of a fascinating history. I think it's kind of your cliche Silicon Valley story, but Pinterest was officially founded in 2010 by Ben Silbermann, Evan Sharp, and Paul Sciarra. Silbermann had attended Yale University and worked at Google in its online advertising division immediately after. Apparently, he wanted to build something on his own. So with the encouragement of his girlfriend, he left Google and started Cold Brew Labs with Paul Sciarra, who was a college friend. And the goal was to be, this is when it was really popular to do like app incubation places. And so it was an app development company, and their initial product was a shopping comparison app named Tote. You could browse apparel and goods from 30 different retailers in one app. It ultimately failed, but they quickly learned that a lot of people came to the app simply just for the discovery portion of things. And so that's kind of what inspired the idea for Pinterest. Paul and Ben, after closing Tote, quickly came up with the beta for Pinterest. They pitched it to a third co-founder, Evan Sharp, who I think is credited with writing the majority of the code. And later in 2010, they officially launched Pinterest, had a lot of early success, a lot of early adoption, a lot of venture capital funding, as you might imagine. And they IPO'd in 2019. However, since we last spoke, a lot has changed. So first of all, users have been in decline. They've been suffering on the user front. I think they benefited from COVID and the rise in e-commerce. There was also some lawsuits and walkouts due to alleged racism and sexism at the company. And the CEO, Ben Silbermann, last June decided to step down. Well, I guess.
Fun fact.
Basically a year ago.
Fun fact. He still gets paid $200,000 a year as an executive, not as a board member, but as an executive chairman. So, just a fun fact for anyone. Yeah.
And the other thing I'll say is about a month after the Elliott management stake was announced. And so I don't know if it was, maybe they had basically said, we're accumulating the stake and we plan on taking it, and encouraged him to step down. I don't know. The two events just happened to kind of coincide one after the other. And Bill Reddy, who was previously working at PayPal, was assigned as the CEO. And that's kind of where we're at today. I think the business has improved a little bit from where it was a year ago. They've started to stabilize some of their numbers, and they've done a lot of talking about cost savings and kind of improving margins, but it takes some time to kind of move that through. And so that's I guess the current state of things.
Next quarter,
they've done a lot of partnerships.
Yeah. Next quarter costs will we'll clean up those costs, right? Next quarter. I'll hit what do I say more about Bill Reddy during the management ownership section. But I think the industry and landscape and competition here is super interesting when we talk about Pinterest. Generally, while there are grouped into social media. It is a little bit different because they don't really compete. Like, would you argue that they're competing with Twitter? I don't think so. They're generally competing for people's engagement and time spent in their free time. So when you look at it that way, I think the industry is fast. Like I said before, are they competing more with Twitter, or are they competing with, some other social media stuff like Instagram or TikTok, but really all sorts of commerce ads? And that could be connected TV ads, that could be traditional broadcasting ads, that could even be static billboard ads, that could be newspaper ads, a lot of stuff like that they're competing with. Again, they're competing with time spent from all their users and really everyone around the world. We all know, specifically with e-commerce, that there is a ton of spending in this area. I don't have to go through too many numbers, but just for example, for some context, the US e-commerce market is closing in on $1 trillion in annual spending and should continue to grow. Good chunk of that from these companies is spent on advertising to acquire new customers for the e-commerce market. That's honestly been maybe the number one driver for Meta, / Facebook and Google and, Amazon ads over the last 5-10 years. And then if we compare their engagement across social media companies, Pinterest is large, but in that second tier, I would say, along with Snap and Twitter of, the scaled social media companies, but not as big as the ones from Meta or Google. So if you compare them, we have Facebook, they have 3 billion users, YouTube, 2.2 billion, WhatsApp, 2 billion. These are kind of estimates because sometimes they're not given out regularly. Instagram, 2 billion, TikTok, 1 billion, Snapchat, 500 million, and then Pinterest, 463 million. So right around the Snapchat range, like I said, so quite large, but again, not as large as the ones that have crossed 1 billion. I do want to make, and this is a good context for the rest of the episode, because this is kind of the key question when looking at Pinterest as an investment. And that is the ARPU gap, which is average revenue per user, which is in this case on a quarterly basis of Pinterest versus Facebook. Now I'm going to show you a few charts here. I'll describe them at least, or I'll try to. Maybe Ryan can help me out if I'm missing anything, but let me share the screen and try to get that up there. All right. Oops. Okay, Ryan, can you see that? So if we look at...
Yes.
All right. So if we look at Pinterest global ARPU versus Facebook global ARPU, it is significantly lower. If we look at, the actual number here.
7-to-1.
Yeah,
eight times larger.
In Q1 of 2023, Facebook's global ARPU was $9.62 and Pinterest was $1.32. Now, if we go back to Q1 of 2019, Pinterest's ARPU has grown at a CAGR of 16% over the last 4 years, but it's gone from 73 cents to $1.32, while Facebook's has gone from $6.42 to $9.62. So on a nominal basis, Facebook is attracting much more advertising dollars. And if we look at the United States and Canada, so basically North America, it's probably even worse since this is a very mature market for Pinterest, where Facebook's ARPU is $48.85, while Pinterest is only $5.11. Those are a lot of numbers. I think hopefully gave some good context for anyone listening. Again, if you want to see those charts, sign up for the newsletter. It's free. I think they're going to be very useful for anyone looking at Pinterest. I don't know if we want to answer it now, but maybe kind of set it up as a teaser for our bull case, bear case, highlights, lowlights. I think the key question is, can this gap continue to close over the next 5 years? Would you say, Ryan, that that's the key question for Pinterest investors to ask?
Yeah, and I think maybe a more important question to ask is, why is the gap so large? And it's really, at least from what I can tell, it's just the fact that Facebook's targeting is that much better. So if you're running brand awareness campaigns, Facebook's getting it in front of better eyeballs. I looked up, I was toying with Pinterest this morning just to kind of research the platform and get a better sense of, kind of what
it looks like right now. Yeah.
Yeah. What kind of ads do I really get? And maybe they don't have that much data on me. I don't know. But I looked up, I think it was like cool date ideas. And I got an ad for Marriott Bonvoy in Montreal. So it's not like, that's the kind of stuff where it's like,
For reference, we don't live in Montreal.
Yeah, I live in Seattle. But when I see that kind of thing versus the really hyper targeted ads you get with companies like Facebook, you can see why brands are willing to pay more for that. And so I think I don't know what it takes to close that gap, like in terms of the advertising algorithm.
Oh yeah, I'm going to talk about this.
That's what concerns me.
I'm going to talk about this in the highlights and lowlights. Was Pinterest, they talk about Twitter being the the clown car that fell into the gold mine. Is that actually Pinterest? I may make that argument. Okay, let's get a management ownership, maybe a couple more interesting things here. I'd say for one, the founders still have controlling stake here because they have class A and B shares, and it is 20-1 voting power. So voting is controlled by the founders. I think that's an interesting note when, we have an activist in here. I wouldn't say it's an aggressive activist, but we do have an Elliott management investor, worker, whoever, employee on the board. So they have some influence here. But again, at the end of the day, the voting power here is a bit of a conundrum. And the founders aren't running the company anymore. So it is a bit strange. But if we look at Bill Reddy, he has been at Pinterest for around a year. He came over from Google Commerce. He was there for a couple of years. But before that, he spent a long time at PayPal. And it was at the Braintree division, which he came over to PayPal after that company acquired Braintree. Braintree they own Venmo, but really they were a checkout solution similar to, say, an Adyen or Stripe. So powering a lot of, say, e-commerce and other transactions around the web, around the world. I would say as a side note, we talked about this last time with Pinterest, is they kept saying over and over, yeah, we're going to get our native checkout going. We're still building it. We kind of had some gripes with that because they have all these employees and it seems like they weren't really getting many products out to market. I would say as a side note here, if Bill Reddy can't get a checkout experience to Pinterest or on Pinterest, given his, background at both PayPal and Google, I think they may just need to fire everyone in the product development division because where are the products? And with all these employees, I mean, we got to see some improvement there. I would say as another note on the executive team, they just hired last month a new CFO. She is from Wayfair. Do you think, Ryan, that this can be a positive catalyst for capital allocation changes, or is that just some false hope? As a lot of people did have complaints about the old finance department, the way they would spend money, the way they would not buy back stock, the way the balance sheet was unoptimal. What do you think?
Sorry, 1 second. I was on mute there. If I remember correctly, when I looked at Wayfair, I wasn't very impressed with the financial management that went on there.
So this could be, because I was thinking, we got a new CFO, and then it's like, oh, it's from Wayfair, and you're like, okay, all right.
So I may have been wrong. I think there might be a way to check out, but it was like its totally own page, and it didn't really it wasn't a part of the browsing experience on Pinterest. So. And Bill Reddy said this in a recent analyst kind of conference. It wasn't getting any use. There was no take up with after launching that. So maybe there has been some toying around with trying to build checkout into the app, but basically they have not been able to convert browsers to shoppers, which feels like it's a platform where they should be able to do that. So that's kind of the big gripe here. And I think you're right. If Bill Reddy can't do it, who, as far as resume goes, has the perfect chops to be the person to convert that, it's concerning.
Yeah, I would add that, I guess there can be a lot of different checkout solutions. You could have one where you stay exactly on Pinterest and they're the one running the payments. And they're getting the payment revenue and they're getting advertising revenue on top of that. That would probably be similar to, an Amazon advertising solution where everything's native within the Amazon website. But I think with Pinterest, and they're pivoting to this, and we're going to talk about that with their Amazon partnership, they seem to be pivoting from trying to build their own payments and checkout solution, which seemed, as Ryan mentioned, failed, to building out basically the best ad tools to connect the users of their platform, the shoppers, directly to the checkout pages or the shopping pages on other websites.
And
all right,
if it sounds complex, like it sounds like maybe we don't have a full grasp on the advertising experience. I went through it and tried to advertise, and it was not very intuitive. Like, and I've gone through a number of websites and tried to potentially advertise, and it's like, they ask questions like, "What's your goal?" It's like, to convert people, to raise brand awareness, or to sell stuff. It's like, okay, for a lot of businesses, it's like all the above, So it's hard to, I think, parse through like what kind of campaign you're running. It should just be like, hey, what's your budget? We're going to find the most people we can for you that we think fit the bill. It's a lot more intuitive with like Facebook and Google AdSense, or even Twitter, who I think sucks at advertising. They made it easier too.
Yeah, and we'll get to that later in future growth opportunities and how maybe they are transitioning, and hopefully over the next few years they can change that. But the last few things on the executive compensation, they keep it very simple with their strategy. They pay a light base salary and then give the executives a lot of time vesting RSUs, which are restricted stock units. It's a little different than stock options, where it's not based on a price. It's all just based on like, okay, you get these shares at this certain time, and it doesn't have to pass a price hurdle like an option. It's just a stock unit. They claim in the proxy, and they claim this in every proxy statement, but again, they specifically talk about this a lot, that this strategy of giving out a lot of restricted stock units is aligning the executive team with shareholders. Do you agree with that? And I think that the gripe I have is specifically RSUs. I get a little bit concerned that people don't care about the stock price, but if you give someone options or basically price hurdles where the RSUs vest, or, like how their performance RSUs, I like that a bit better. But what are your thoughts, Ryan?
I mean, ideally, I think you have performance-based RSUs. I'm looking at this compensation package for Bill Reddy that you put down here, and it makes me feel like...
Well, I think they had to throw out a big bag to get him to come over. So it was $100 million for the joining stock award. Yeah.
I'm trying to like go through in my mind, like if you were given $100 million to join a company, that was what their package was to you, and that was their incentive for getting you to join. What's going through your head there, especially for a company like Pinterest, where it's kind of been treading water for a while? I mean, yeah, it's $100 million in stock. You could sell it over time, but what's your goal? Is it to just like absolutely optimize shareholder value? Or, I mean, I think that's it in theory, but really you're getting paid. If as long as you just like kind of hold where the company's at and maintain platform relevance, you're going to have a nice hefty chunk of change there.
Sure. Yeah. And it's not the end of the world. This executive compensation is not bad, but I generally think I would rather have executives that, and I think Reddy seems like he wants to win here, but I want executives that just want to win regardless of their pay, kind of like a Zuck situation. All right, let's go to earnings, Ryan, as we try not to we went a little long there. What do we think on earnings? Seems like you said that things are improving. So yeah, why don't you go through the numbers?
Yeah. Over the last 12 months, $2.8 billion in revenue. And this is kind of to just give like full context. So $2.8 billion in revenue, all that's advertising. Like Brett said, it's a big advertising business, but kind of second fiddle to the Amazons, Facebooks, and Googles of the world. 75% gross margins. Obviously not a lot of, variable costs there, because you're really, basically you're paying for infrastructure spending and maybe customer support. I don't know what else is in there.
They said they had some, there's depreciation stuff on customer support and then payment processing, but it's mainly AWS.
But they spend a ton on operating expenses. And I just don't know if they really need that much engineering talent, but basically they're losing $300 million a year in operating income. They have $415 million in free cash flow for the last 12 months, but pretty much all of that is in stock-based compensation. They also had like a goodwill impairment, or maybe it was like some lease impairment thing. But it's a break-even business, essentially, in terms of real earnings. They do earn a lot of interest income now because they were so, their balance sheet just has so much cash on it and no debt. I'll talk about that in a second, but the reason I say it's getting back on track is when Bill Reddy took over, users were kind of in free fall. He stepped in. Users have since improved. This quarter, they reached 463 million monthly active users. That was up 7% year over year. It seems to have been like quarter after quarter of steady user growth. Global ARPU, however, is down 1% year over year. It might be due to like the advertising market in general, but really I think this is an average revenue per user story, if you are to believe it. And I mean, you're not investing here for the user growth. Like they're already at scale. So it's for them, it's proving that they can actually really, really monetize that massive user base that they already have. And it has grown, like Brett mentioned, but not nearly. They're still ceding market share to the other bigger players. When we look at the balance sheet, it's probably the simplest balance sheet I've ever looked at. $2.7 billion in cash, all pretty much just money market funds and short-term treasuries. There were some corporate bonds in there, but there's literally no true financial debt. They generated $25 million in interest income in the most recent quarter. So annualized, it's about 4% interest. Which, I mean, kind of checks out in terms of just buying 1-year treasuries. Maybe it's a little higher, but
still can't generate positive net income though. That's tough.
I know.
That's tough. Yeah, it's great. I mean, we'll talk about the gripes I have with the balance sheet later, but let's move to valuation. I'm going to keep it really simple again. Check out more of the charts that I'll put together for the newsletter. That'll come out along with this episode. There'll be more stuff there, but I'm going to keep it really simple. Well, first off, I guess just for context, they got a market cap of $19.6 billion. You take out that negative $2.7 billion in net debt. We got an enterprise value of $16.8 billion. I'm going to maybe be a little bit, don't be frustrated, but this may be a little bit naughty, is using an EV to gross profit number, because again, Ryan mentioned they got that free cash flow. It's kind of fake. And then they also have that operating income. There was a goodwill impairment, whatever. You can adjust for a lot of that stuff, but I think using a gross profit number can be good because it can kind of show, okay, how much potential is there for earnings if they really lean up their operations or grow off of this operational base. Yeah, that could be a boy who cried wolf situation, but again, I think it's still useful. And their EV to gross profit is 7.9. So really not that cheap still, but not crazy expensive. It's kind of right in the middle of what'd you say, Ryan, of a kind of a gross profit multiple?
Yeah, I would say being a little naughty with the gross profit.
I think that's the most useful one if you're trying to build a bull case.
I wonder if some of the management teams that were kind of raised in the venture capital culture, Silicon Valley culture, look at gross profit as, okay, this is how much money we have to pour into our employee base.
Yeah, this is how much money we have to give to our employees and make them happy and make a nice campus, give everyone good food. And that's not supposed to be my focus. Okay, anecdotal evidence, Ryan. You do have a steady girlfriend, so I guess you have better anecdotal evidence than me. So what do you think here?
Yeah, I don't use Pinterest that much myself, but my girlfriend does use it on a pretty regular basis. And I think she's probably a monthly active user. And she says that at least the use cases I've seen, a lot of it's like recipes, a lot of it's like, decor, outfit type ideas. She's never bought anything on the platform, but she's certainly used it. She certainly bought stuff that she found on there, which is a very monetizable thing for Pinterest.
It should be. But the worst, I think everyone does find it on there and then you go search it on Google or Amazon or right.
Yeah. If you can just make if they can bridge the gap between their app and the checkout on another website, which I think they're in the process of doing. We're going to talk about the partnership with Amazon here.
Yeah.
That is so much more revenue for them than someone. It makes it so much easier for someone to make a transaction where they get a chunk of revenue from it than them just going over to Google.
Yeah, and it's just building that habit of, okay, I see it on here. Actually, wait, all these things are clickable now. It's not going to, you're not going to stay on Pinterest, but I'm going to click on it and I'm going to go to this other website. I may or may not buy it, but then I can check it out and Pinterest can track you there. For my anecdotal evidence, I just have the question of this. Should I be confident that engagement can be stable or growing over the next 5 years? I think that should be true because when we looked at the user declines, I think Bill Reddy kind of had a very easy task because he was just lapping the bullwhip effect of the pandemic, right? But for some reason, there's just a little bit of a feeling I have that I have doubt that Pinterest can grow users without pouring a bunch of money into, customer acquisition marketing.
Yeah. I mean, at the same time, like the platform, the longer it's around, the better it gets.
Yeah.
In theory, as long as they maintain like the current user base or more, because the more users that are on there, the more pictures that are uploaded, the more effective the platform becomes. There's kind of a network effect there. However, because Instagram has done such a good job rolling out shops and native e-commerce, it feels more and more competitive. Like e-commerce brands that would have listed on Pinterest are also doing so on Instagram. And it feels like, I mean, they've got the discovery component there as well. It seems like more and more people are beginning to use the explore page on Instagram. That's, I think, why they got away from the timeline based feed Facebook did. So I don't know. It seems like they're competing more and more with Pinterest.
Maybe Instagram going after the TikTok competitor with Reels, that could actually be beneficial for that, or for Pinterest. What do you think?
The thing with Reels and short form video generally is that I think it encourages more of the exploring / discovery mode, as opposed to like on your home feed with Instagram, you're checking out a lot of what your friends post or people you follow. When it comes to short form video, most people aren't posting content, so you're getting more like the global discovery. And I think if people are going to you for exploration / discovery, that lends itself better to like brands selling on there. So I don't know. I'd say that probably hurts Pinterest more than helps them.
Yeah,
but I mean, Pinterest has done a decent job with short form video as well.
Yeah, it's interesting that they pivot into everything that's just hot, which is unfortunate. But a lot of companies do that. Yeah, I guess
costs them a lot of engineers to do it.
Yeah, I guess one of the key things is, can they convince people to do their e-commerce discovery on Pinterest versus TikTok or Instagram or anywhere else, really? All right, let's move to future growth opportunities. Ryan, you have the big one that they just announced that everyone seemed to be asking about 10 questions about this on the conference calls. So what is it?
Yeah, and they are like partnership crazed. They love to announce partnerships. Pinterest, especially during like 2020, 2021, they were doing it so much. But so they did just announce a new partnership with Amazon. However, I think this is a little more meaningful than some of the previous ones. It's not entirely clear what all this entails, but in their press release, they said, "We are pleased to have selected Amazon as their first partner for third-party ads. It's going to take them several quarters to implement, and it said it will include a seamless on Amazon buying experience." However, I'm not sure, and I was trying to read through what Bill Reddy had to say on it in the recent analyst conference, but it wasn't like, I don't think he necessarily knew everything that the partnership entailed. And he also said they're not going to be the only partner for third-party ads. So
yeah, I think I kind of understand it though, is basically if someone's going through Amazon advertising as let's say they're an apparel brand, they're advertising through Amazon, you can click, I want to advertise on Pinterest as well through Amazon ads. And then the ad shows up on Pinterest. Again, it could be, there'll be a little details in here that changes. And then when you click on the ad natively on Pinterest, it takes you immediately to the product page on Amazon. So it's like an Amazon sponsored listing, but on Pinterest, which I think will work pretty well. And I think can work with Google as well.
Makes sense. I guess, are they using Amazon's targeting or are they using
God, I hope they're using Amazon's and they just get a nice little cut there. That would be way better. But
yeah, I'm sure you can use a lot of the same keywords, but it just feels not, I don't know. It's not necessarily the same kind of search query. Like with Amazon, you're looking very specific for something as opposed for like the inspiration factor that you go to Pinterest for. So I'm wondering how hard it would be to kind of roll out those ads through Pinterest for Amazon. But I mean, I'm not opposed to them just selling ad inventory to third parties. I think that might be the best way to monetize the platform. Focus on attracting the users. Let the truly great advertising businesses do what they do best. Yeah,
maybe. And look, they'll have to give a cut to Amazon, but I mean, it's still going to be gross margin positive. I'll say mine. And look, it seems like a bit of deja vu here because we've looked at Pinterest multiple times. It's one we're interested in. And I guess spoiler, we probably will be interested in this stock by the end of this because it seems like such an engaging platform that people have stuck around for, like a decade now. And the potential for shopping and basically e-commerce ads is incredible. But they've been saying this year after year after year since going public. They always talk about, we're going to grow ARPU. And I guess they have, but really not by much. They talk about growing international ARPU, which is just abysmal. They haven't done anything with that. And then they talk about shopping stuff. And I do like the pivot from kind of the native shopping checkout stuff that they were talking about and the partnership with Shopify, which again makes sense, but maybe isn't as relevant to, again, these more advertising e-commerce stuff, which probably makes a lot more sense to just have sponsored listings. And I think the main future growth opportunity is just eliminating the main layer of friction for Pinterest, which is the connection from the shopper, which I would describe as their users are all basically shoppers, and bridging that gap to them purchasing a product at these merchants, whoever they are, using Pinterest tools. It means increasing advertising effectiveness and making, I wrote native shopping tools. I would say making the shopping tools, which again is taking people from Pinterest to these third-party checkout buttons, much more useful. I think they're making good progress. They gave some good anecdotes here. They said that advertisers who adopted their new measurement tools have increased their spending by 30%, which I think is a good sign. Ryan mentioned it was the quote unquote mobile deep linking, which I think any product manager, maybe Meta would be like, yeah, we figured this out like in 2012. Is basically that tool that links people directly to the merchant's checkout page. They said that's growing quickly. They didn't give out any hard numbers there, but I think that's very useful. I mean, that is basically what we're describing here. Is taking you from Pinterest. You click on say shoes in what do they call it? A pin or whatever on a shoe, and it takes you, boom, directly to that checkout page. That's incredibly valuable, I think.
Yeah.
But it's got to show up it's got to show up in ARPU. It's got to.
Yeah, 100%. Let's talk highlights, lowlights. For me, I think Bill Reddy's the right guy for the job. If there is anyone, it seems like he's got the right resume. And he was apparently supposed to be Dan Schulman's successor at PayPal. I recently listened to an interview with, I believe it was Elliot Turner, who had owned PayPal for a long time. He said it was when they owned PayPal initially, they were really excited to get Bill Reddy on as kind of his successor once Schulman retired, and then Bill Reddy left. So now they're kind of left not knowing who's going to be the successor. Or maybe did they?
I don't think
they announced one?
What we just covered, and we should remember this. So confusing though. I think they said they announced that they're going to announce someone by the end of this year. So great job, guys.
All right.
Classic
okay.
PayPal.
Anyway, Bill Reddy, it seems like he's a hot commodity in the world of tech. They've also stated plans around cost savings. They've done 2 rounds of layoffs, but it was relatively small. I think it was low. It was like I think 6 to 7% of the overall staff in the last 12 months. So not tiny, but relative to their cost base, it looks like they might need more. although they've got the cash to kind of burn through if they choose to do so. And then the network effect I talked about, the platform has been around for 10 years. It's continuously grown. It gets better the more people that are on it. However, I think at this point, it kind of provides like the 468th million user is not as important as the network effect used to be. Just because
it's not user to user. It's not your social network.
Yeah. On any search query, you're pretty much going to get enough information at this point. Whereas it's not, you're not looking for individuals. You're just looking for content discovery. And so,
but you want the new trends on there, right? The trends change year by year. So, the content supply will be hard to replicate.
Yeah. They said they have, I think it was one of the most image rich databases in the world. So,
crazy. All right. Bye now.
But yeah, I think it helps once you've reached scale like they have for a platform like this. It's kind of hard to replicate. So there's some staying power there. The lowlights for me, though, is it feels like they really have not been able to make the most of the platform. And I don't know if they have the blueprint for how to do it. I think there's a good chance that 5 years from now, we're talking about if they ever close that ARPU gap, this is going to be the operating leverage is going to be there. But it just simply hasn't come anywhere close to the other big social media platforms. Now, if it means you got to sell your ad inventory to other players, I think maybe that's the right thing to do. If you don't think you can get the targeting algorithms to the level of other players.
Yeah, this is what I said earlier about, is this the clown car that fell into the gold mine? Maybe Twitter's the clown car that fell into the gold mine, and this is the clown car that fell into the platinum mine, the diamond mine, whatever is more expensive than gold.
Yeah. And then I guess they just seem pretty loose with stock-based compensation. 18% of revenue is pretty, that's one of the higher figures I've seen for a company of this size.
100%. Yeah. For reference, big tech is more the 3% range. Yeah. My highlights, this is a highlight and a low light, like Ryan just mentioned. They have perhaps the easiest job in the digital world as okay. Why do I mean their job is easy? Because when someone goes to Pinterest or logs in or opens the app, they are literally telling the platform what they want to buy. It's incredible. And apparently they cannot monetize off of this. How simple the Amazon search ads are? You put in paper towels and Bounty pays for the ad. And if you click on the sponsored ad, they give Amazon a small cut. How is Pinterest not doing this? Or they're obviously trying, but how can they not? Look, UCAN ARPU is just $7.60 in Q4 2022 versus Facebook at close to $59. That gap probably shouldn't be closed fully because Facebook is much more broad and much more user engagement, much more video content that can have, that has higher ARPUs, but that gap should not be that wide, especially when we're talking about a per user basis, when some of the Pinterest power users are extremely valuable to the content providers on that platform.
It would never pass, but doesn't this seem like it'd be a great acquisition for Facebook?
Oh, they do well by it. Yeah, 100%. Maybe Google.
They could flip the ARPU overnight.
Yeah, Google. Yeah, of course. Google could do well with this too, right? Because, the most similar thing is searching for products on Google as well. Any of the big three, I think, could do well with this. Other one is, I think the new executive team could end up being a nice breath of fresh air. We're a little worried about expenses, but the execution has been solid so far. They have that active investor that could keep them in line. I think that's a good combo. And the lowlights for me, though, is the capital allocation and SBC mismanagement. I think it speaks for itself. The balance sheet, the buyback has been weak. You're just sitting on all this cash. You didn't have any convertible notes that you took out. They were giving companies like Pinterest 0% interest convertible notes at absurd prices, and they didn't take it. The finance department frustrates me. And they have $2.7 billion in cash and a market cap of $19.6 billion. Can we maybe, put some of that into buybacks, especially when you're generating positive cash flow? It's just a question, right? Or am I crazy here, Ryan?
No, I think you're right. I'm trying to look if they still own them. Because I'm not
Elliott?
100% sure if Elliott still owns.
They have a guy on the board, though. I saw it in the proxy. So,
okay.
I don't.
Yeah, I don't know.
Well, wisdom could be wrong. Yeah, but okay. I think they still have a relationship because they have a guy that just got voted to the board. All right. As we wrap things up, let's move into the bull and bear case. Ryan, what do you think needs to happen for the stock to do well going forward?
I put some numbers on it just so everyone can kind of get a grasp of what it takes. Really, they're going to have to drastically expand ARPU, which is going to be super helpful for revenue growth. So I basically just assumed that if they grow revenue by 15% a year, and you can make that mix what you want, that could be 5% MAU growth, 10% ARPU growth, vice versa. Historically, it's been kind of a blend of both. They'd be generating just under $6 billion in annual revenue by 2027. If you apply a 15% true operating margin, GAAP operating margin, that's just under $1 billion in operating income. Their market cap today is just under $20 billion. So it's trading at 20 times theoretical 2027 operating income. That to me is not very attractive. They are going to have to grow revenue well in excess of 15% a year or hit an seriously cut back on operating expenses, primarily SBC.
Yeah, I mean, you can run numbers that'll make any stock look expensive. But yes, as you were trying to say, you need to have a high expectation for revenue growth going forward, or that they hit 30, or they get to Facebook level margins.
Yeah, but it's just like, what's the reality that they're going to do that? I mean, it's not. They're going to be going from like negative 10%. Here's my assumptions: 15% annual revenue growth and negative 10% operating margins to positive 15%. That's quite an improvement over a 5-year period. And the returns still don't look like they'd be that good.
Yeah.
So I guess, sorry, that's not much of a bull case, but it's just I like to try to put some numbers on it so that people know what it would take to get a good return from there.
At that point, they'd have a ton of cash on their balance sheet. So maybe if they do some buybacks, could really juice some stuff there. I mean, they could really reduce share count if they got aggressive with it and started generating a lot of true free cash flow. But we'll see. I mean, I had a similar one. Like, look, ARPU has grown at a CAGR of 16% globally. If that continues, I think things will be fine. But the price isn't as attractive, I think, if you just think they're going to grow ARPU at 16% and not really grow their overall users. What do you think about bear case, Ryan? I think listeners kind of already understand it, and it's really more of the same, right?
Yeah. I mean, just a lack of profitable growth, and kind of what we talked about earlier, which is let's maintain platform relevance. So let's maybe grow users steadily, grow ARPU steadily, reinvest all that into our employee base. And people will have to keep valuing us as something because maybe one day we choose to show some operating leverage. And so it just worries me that they're not going to ever optimize for shareholders.
Yeah. And maybe the optimal play was to just dump your bags on PayPal and let them do it, as apparently that was being thought of. Yeah, look, I think mine is what happened over the past 5 years continues over the next 5 years, which is mainly no monetization outside of North America. I mean, whoa, how does Europe just not monetize at all? Slow product rollouts, which they seem to be fixing. I would maybe have a little bit of confidence that this isn't going to happen, but I think that, could continue. Why not? It's a lot of the same development teams. And then anemic engagement growth, especially from advertising engagement growth. I think this is a company that seems to be, I like using this analogy, stuck on the treadmill, which is working hard to stay in place, versus other platforms like a YouTube or an Instagram that seem to just flow down the river and don't have to do much work to grow. I think it's a classic example of that. Now, let's wrap things up. More or less interested, Ryan?
I'm less interested, honestly. It feels to me the platform is cool. The platform should lend itself well to monetization, but it doesn't. And it hasn't. It's not really improving that much. So I worry that it's hard to turn a culture like this around, and that maybe they just don't have the advertising chops.
Yeah, I think that's a fair point. The culture is the biggest concern. I say I'm more interested mainly because, yes, the platform has so much potential from a business perspective. They fix a few things, better trajectory and margins, product growth, buybacks. I mean, it could be a great buy at the right price, but I think it's only a buy at those prices if you are confident that those things are occurring. And I'm really not confident they are. So why would I trust this, as I said earlier, boy who cried wolf situation? I think that's going to be it for this episode. Again, remember, if you got to the end here, there should be a survey that we're throwing out to people. Hopefully get enough people to respond to that. Next week in our Fallen Angels episodes, we're covering Lyft, who again is going to be in a tough situation. Last week we covered SoFi. By the end of the month, we're going to be covering WeWork and Coupang as well. Thank you, everyone, for listening. Remember, we are not financial advisors. Anything we say on the show is not formal advice or recommendation. We're general partners at Arch Capital, and clients may hold securities discussed in this podcast. Again, thank you, everyone. We'll see you next time.